We have with us a very special guest in studios. Vikas Khemani, founder of Carnelian Capital Advisors, joins us. Vikas, such a pleasure to have you in the studios on this very significant week for NDTV Profit. First up, how are you feeling about the market? Some may argue it's expensive, some may argue there's still value. Morgan Stanley, of course, fairly constructive on the road ahead. Where are your bets?
First of all, thank you very much for having me in your studio, and congratulations on the launch or relaunch of your channel. So I'm quite positive on markets, frankly speaking. I don't subscribe to the camp that markets are expensive. I think, given the India story, given the potential growth, markets are not at all expensive. They're in a fair value range. They are not cheap, but I don't think they are expensive either. And I always believe the valuation is function of three things: ROE, earnings growth, and discounting factor. If you see, India's ROE is one of the best compared to any other market or its historical time. Our earnings growth are 15 to 18% sustainable for quite some time, at least next 3 to 5 years. It looks like that. And thirdly, discounting factor, which in turn is a function of risk-free rate and risk premium. And if you look at both, risk-free rate is probably lowest ever, given the difference between US and India 10-year paper, and our risk premiums are coming down with whatever comfort around Indian story is there. So here is a very interesting trivia. We all understand, in case of a fixed income, that if a 10-year paper with 6 duration, a 2% drop in the interest rates makes the fixed income paper appreciate by 12%. A 2% drop in the interest rates with a 6 duration paper, paper will appreciate by 12%. But it's not that intuitive to understand in case of equities. So if a 2% drop in the discounting factor, the DCF value, everything else remaining same, changes by 35%.
Oh. Wow.
So if, let's say, there are nuances to it, but I'm just giving a broader range. So if earlier 20p was fine, with a 2% drop in the interest rate, your 27p also becomes fine. I'm just giving you this context. So I do believe that we are not expensive. I think, of course, markets will be subject to sort of volatility, intermittent corrections, but I don't subscribe to the camp that, in fact, if markets were to trade cheaper, with this kind of setup, I would be really worried about the hypothesis.
I mean, emerging markets are trading at a 50-year high valuation. So that, of course, is something that we can talk about in detail. But yeah, we look well structured in place for now.
Yes.
What about, the big sort of X question, or the joker in the pack, in the sense? So everything else is aligning, crude is benign, treasury is fine, US recession seems like yesterday's headline, and political stability is there. But we don't know what the Fed's going to do. We don't know where the interest rate cuts are going to begin. How big a factor is that in this horizon that you have painted for us? Very positive picture you've painted for us. What is the capability of this one factor to spoil that party?
So I think one thing, Tamanna, is very clear, that interest rates have peaked out in US. I don't think there's a further scope of going up. You might argue, the question to ask is when they will come down. I don't know. It can be 6 months, 12 months, 24 months. But they are definitely coming down in that time frame, right? So I think worst is behind us. If, let's say, they come down in 6 months, or they start coming down in 6 months, then we will have probably a lot of flows coming earlier. If they come down in 12 months, slightly later, but doesn't matter. The point is that, whatever $45 billion of outflow we had over last 2-3 years, because Fed started raising interest rates, all and more will come to India the moment that reversal happens. And that period is anywhere between next 12 to 24 months. I don't know the precise time.
Yeah, but the question is that, and I'm saying this from the point of view of a large number of retail investors who have just come in, and not just the mutual fund pack, who are coming in, looking at the markets right now, seeing maybe some of the investments running up, wanting to put more money and wondering what to do. Do they have to wait for a correction, for a crack? Is that round the corner as an opportunity to come in? Just, if someone just came up to you and said, Vikas bhai, abhi kya karna hai? What would you say?
I will say deploy, invest, because unless your time horizon is 6 months, I don't know that. Because 5-10% correction can come into market at any point in time. Nobody can tell you when, how. You run the same risk when the index is 18,000, 15,000, 21,000, right? So that you can't. But if your horizon is 5 or 10 years, I don't think one should worry. There's a very nice saying by Peter Lynch that more money is lost on waiting for correction than actual correction. A lot of people miss out on waiting for correction. When you have this kind of setup, like you said, everything seems to be working well.
Yeah.
I don't think, at least next 3 to 5 years perspective, I think India, or forget that. In fact, even from longer term perspective, I think next 10, 20 years are very well planned for, very well disposed for India. And India is one of the best market globally. So if you are living fortunately in that era, in this market, all you have to do is just keep allocating whatever capital, towards equities and asset class. And we are still, as a society, significantly underinvested. Funny part is that we all make statements, so much money is coming, but I'm saying still we are significantly underinvested as a society, in compared to our overall household savings. So long way to go. I don't think we should, every time things start working out, we start getting worried. What can go wrong? I think we can just enjoy the journey.
As we should. But Vikas, thanks for
journalist in you has to ask, but
We have
No. In fact, I'm asking the but with a very specific purpose, which is this: that your fund performance, for example, the last 3 years has been spectacular. Some of it might have been bent towards the broader end of the spectrum, which has done tremendously well. So the but comes in is that, is there merit in chasing the broader end of the spectrum now? Or do you believe that even if the markets stay constructive, maybe the tilt might be towards large caps opposed to mid caps and small cap themes in 2024?
No, absolutely. See, Neeraj, these kind of intermittent, changes will keep playing out. Sometimes large caps will do well, sometimes mid caps will do well.
So what is it for 2024, you think?
I frankly speaking believe, I don't subscribe to, some of those large and mid cap kind of allocation.
Okay, you don't.
I do believe that all you have to do is remain invested into high quality business run by great managements. And if you like the business model, if you like the the team or management team, I would rather buy a company small than big, right? Because that is going to give me a significant compounding effect of 5, 10, 15 years. Not to say that you don't have great ideas in large caps as well, right? We have had one of our biggest winner, ICICI Bank, which is a large cap over the last 4 years. It has run 4x, right? So whenever you see a good risk reward setup, whether it is large cap, small cap, mid cap, you have to just invest. So we keep hunting for that. Of course, having said that, if large caps have underperformed in recent past, you might see a temporary outperformance in 24, 25. But over a 5, 10 year period, I have no doubt that small and mid cap will outperform large cap, because in a structural bull markets, in a structural economic revival, it is the wider market which does well than the index.
Okay. And so let me then try and understand how is, since we are at the end of December, virtually at the end of December, Outlook 2024, I'm trying to understand where is it that Carnelian is placing its largest bets on? Because one way is to ride the winners, one way is to try and bet on changes that are happening within a structure,
yes,
or a sector, and earnings growth might be strong in the future, if not in the past. Where is it that you are most overweight on?
So I think, there are 3 or 4 sectors, themes we've been very, very overweight on. Of course, you cannot not be bullish on BFSI in this kind of setup, right? Within that, we've been super bullish on PSU Banks in the recent past, and in last, 4 years of our history, last 1 year or so, we've been a lot more, we bought, only last 1 year we bought PSU Banks, and we think that there's a lot more steam to go there. So BFSI is a space we like, no doubt on that, and that will continue to do well over the next 5, 10 years. I have zero doubt on that. Manufacturing as a theme, we are super bullish. As you know that we have a separate dedicated fund which we launched in October 2020, 3 years before, right? And that fund has delivered 47% CAGR over the last 3 years. We think that,
wow,
over the next 10 years, manufacturing as a theme will do very well. And when I'm saying manufacturing as a theme, I mean is what sits between on import substitution and export-oriented opportunities, typically non-commoditized player with 50-60% kind of gross margin, those kind of niche businesses, which we believe that in fullness of time, 5, 10 years, 15 years, will become multi-baggers. Already they have become, but there's a lot more steam to go in times to come. It is very much similar to where IT was in mid-90s. So, that's the kind of conviction we have on the theme, and we think it's a long way to go. So that's the second sector we've been very, very bullish about. Thirdly, IT as a segment, we've talked about again many times over that we're very positive despite a lot of skepticism, despite lots of negativity. People don't believe that. We've been very, very bullish, convinced, and still remain convinced on the IT as a segment.
You put in fresh money to work in IT?
Absolutely, I have no doubt on that.
And
I think
because where would that money go? Large cap IT, or you would still remain bullish on mid cap IT?
Like I said, we've been more bullish on mid cap IT.
Yeah.
This year, 23, despite through the year, we've been told that IT sector will not do well. Most of our stocks are up between 50 to 200%.
Wow.
So especially large and mid and small cap, mid cap IT. But we think that every cycle of a journey, many companies get created. So if you remember 2009 to 14-15 cycle, HCL Tech, LTTI, LTTS, all those companies got created in that cycle. They were tiny minnows that time. So in this cycle also, you will find similar kind of companies getting created. So our objective is to look for those companies which can become,
Which ones?
Which can, I mean, for that you can look at our portfolio, but I'm saying you have to identify companies in that space. And I have no doubt that many companies will become large and large in this journey. So IT is another space which has been very bullish. Then you can keep finding, so far still we have not, last 4 years, I must tell you, we have not bought many consumer names. We've been not very bullish. This is a consensus trade, but we have not bought because we think risk reward has not been so great, and still we are on a sidelines. Whenever there's a specific name or company comes, we don't mind buying.
Yeah.
But as a theme, we have not been still optimistic about.
Talking about exports, you mentioned Midcap IT. How do you feel about pharma? Because I know a few months ago you were constructive on the pharma space. The international marketplace has improved. Things seem to be working in the favor of the sector for the next 5 to 6 years. How would you play pharma? Do you like any of these pharma names currently?
Absolutely. We are very, very bullish on that also, and partly we covered that in our manufacturing theme, but yes, you're right that, we have been very bullish. We spoke about it, I think pharma over the last 6, 7, 8 years have not done well, and now the tide has turned, it has changed. You know that recently the first time US regulator was in India visiting for 10 days, meeting all the pharma companies. Why would they come here? Because recently there was shortage of medicines in US, and we know that India is one of the largest supplier of US medicines in US. So tide is changing. I think this tide is changing for at least 5, 7 years. Within pharma also, CDMO space is a super high growth space, like how in IT ER&D is. That's how you see CDMO is a great space, and you will see many companies. I'm telling you today, many companies 5, 7 years down the line will be 1 lakh crore market cap in this space. It's a very big emerging space, and this segment you cannot ignore. And this is very much like, in some sense similar to IT, where it requires a lot of founder driven, a lot of focus on. It's not an easy business to do, but it's a very good sustainable long term business.
Your take on public sector companies, even today. They are really top of the charts, PFC, HPCL, REC, all, it's sort of a rediscovery that these companies can also perform, their valuations are decent, they can undertake the work that they promised to do, perhaps without policy interference. Have you put your faith in any of these or in this space, and do you have an outlook there?
Absolutely. So we don't sort of treat PSU as a space with the same approach. Our again approach is wherever, first of all, we must give credit to this government that the interference from the government is almost zero in most PSUs, right? But not on all, right? So let's say for that matter, HPCL, BPCL, we still don't have, full pricing, right? So you have to understand where the government's intent is. So for example, we've been very bullish on PSU banks. Why? Because government interference in PSU banks is very, very negligible or no. But more importantly, I think big 3 transformations have happened in PSU banks, right? Asset quality, there were 3 problems for PSU banks: asset quality, governance, and technology. If you see in last 3, 4 years, asset quality problems have got addressed, governance has got addressed, they merged the banks, and they have got, I'm telling you, government has appointed very, very fine, leaders across as a CEOs of these banks, and they are driving transformation in these banks. And thirdly, if you see technology, it was a very big differentiator 15 years ago, because every company had to build technology. Today it is all plug and play. So most PSU banks have spent a lot of money in building, spending in getting the technical capabilities. So today, even a PNB person will come to open your account with a tab. He doesn't come with a form. So today, even most PSUs are reasonably well technology enabled, just like private sector banks. So if you have these 3 problems addressed, there's no reason why a PNB, which has, or any large bank for that matter, huge amount of customer base network, should at 18-19% ROE should trade at one-time book, versus a private sector at 2.5, 3 times. Right?
So the experiential difference or that gap has definitely closed.
So that's what I'm saying.
Where you had a sense that PSU Bank is going to be a bad experience. Just a word on all the fundraising that they are doing, and a slew of them already raising money. Some more are going to, the market is rewarding them in advance of that fundraising also beginning. How are you positioned on that?
No, but they are doing it because government stake has to bring down, and they don't need capital right now.
Yeah.
But they have to do it because government has to bring down below 75%.
So it's an opportunity?
It's an opportunity. I mean, we have no doubt on that. According to me, we have a massive opportunity ahead of us in PSU banks per se. And likewise, you can look at other PSU sectors like defenses, for example, a great opportunity.
But still, Vikas, after the run-up that we've seen already, I mean, it's so thematic, right?
I can only tell you one thing. When you look at 10-year, I mean, I have seen stocks becoming 15x, 20x, 30x, 40x, right?
We're still far, far away from that.
So this is like a long journey, right? And defense as an opportunity, we have just scratched. I'm not saying that there are no excesses. I'm not saying there are no exuberance. So you have to do
there is a
your work and job.
Yeah.
I'm not making that point. But defense as a theme is a 15, 20-year theme. But you have to do your work at a company level.
Got it. Because just two quick things. One, follow-up to the answer that you gave. Private banks are no longer as expensive as they were, HDFC, Kotak, etc. PSU banks are cheaper, yes. Between the two, the chance for a higher delta is still in PSU banks, or do you reckon private banks too?
Absolutely. See, I mean, like I said, private banks also will do well, but PSU banks will outperform because there's a chance of re-rating. You will have earning growth and re-rating. So that our magic movements are happening in the PSU banks right now. So we think that PSU banks will get re-rated further.
Okay. We have Vibha Padalkar coming up next. Just wanted to understand insurance. I was seeing the returns since 2017 hardly performed, right, per se, despite the fact that some of these are great businesses. I mean, she runs a very fine HDFC Life business too. Is there a chance for money to be made here, or are there better opportunities elsewhere?
No, absolutely. I think life insurance is again a very big sector, good sector. I mean, typically, you will always have periods of consolidation and periods of growth. So I think life and general insurance has gone through a, last 5-7 years period of consolidation. And so that has led to, and there were some regulatory changes also, marketplace changes also happening. So that was there. And secondly, now they were trading at a premium, which is kind of corrected. Because see, if you see 2009 to 14-15 period or 16 period, when there was a lot of uncertainty, there were very few playable or investable companies, including HDFC Limited or Kotak, and that made them expensive. But today, same money is going and finding opportunity somewhere else. So the thing is that is leading to re-rating on the earlier other opportunities, but de-rating on the expensive ones. And that journey to a great extent is over. But now, wherever the growth comes, you will see, so it's more like an earning growth story. And all these are great franchises. So I think you should expect a moderate 14-15% return. You should not expect a spectacular return. If that is your expectation, then you are better off in manufacturing and somewhere else.
Also, just a follow-up to that question, what about banking in terms of financial ancillary names? So what about brokerages, investment banking? I mean, you've seen the private market that we've seen currently robust, to say the least. That, of course, would reflect on, companies like JM Financial, for that matter, or brokerages or even exchanges. Would you also consider this a space that one could sort of make money in?
Absolutely. Again, see, when such a large saving pool is getting intermediated, and it's very natural that capital markets are a very big part of it, right? I mean, there are different ways of that. So the entire ancillary space will do well. I mean,
but in this ancillary, if I had to ask you to point it down, bring it down to one ancillary play, which one would it be?
I think asset management, wealth management plays are very good because they have a natural compounding built into that. And if you say India is compounding at 15%, that much growth is anyway built into their assets, right?
Bare minimum that they will do.
Bare minimum they will do. So like, for that matter, the reason why I prefer those players over insurance, because there's inbuilt compounding and then the growth. So if you get a good franchise, then you can have a double engine or double acceleration. I always like a little bit more acceleration given the same risk.
No, that space is actually
to
consolidating pretty well, actually. There's so much activity. I mean, you look at even primary markets, your likes of GM Financial. I can't wait to see what those earnings are going to look like soon.
Stunning. Yeah. But anyways, Vikas, great to have you. Thank you so much for taking the time out and being with us in the studios, and look forward to having you more often.
Pleasure. Thank you very much for having me. Enjoy the conversation.